Hello everyone and welcome back to the channel. We are close to the end of the year, and one of the things that I love to do towards the end of the year is usually take a look at my own portfolio more closely and see what I can do to increase the quality of my holdings and what I can do to balance my portfolio for the next year. As you can see in Your IQ software, I should probably increase the diversity of my holdings, as concentration in tech and financials is one of the main risks of my current portfolio. If you're like me and you're looking to diversify your portfolio outside of tech, financials, and consumer discretionary stocks, then this is a great video for you. I'm looking at industrial sector today, which is often gets overlooked. It's a sector full of companies operate in essential services from transportation and logistics to waste management and machinery. These companies often provide critical infrastructure and services that are integral to a functioning economy, making them potentially resilient investments. They're not always the flashiest stocks, but they can be incredibly consistent and offer solid growth and probably dividends. I'm personally looking to add one industrial stock to my own investments in 2026, and these four stocks here are at the top of my list. I will quickly go over each of the stocks and show you the key metrics related to each of them. First up, we have Canadian National Railway. I discussed this stock in detail recently, so if you're interested to know more details, I highly recommend you to watch my stock analysis on Canadian National Railway. Canadian National is one of the North America's largest freight railway networks, with an incredible reach across Canada and into United States. Think about the volume of the goods moved by rail, everything from grain to coal to intermodal containers. Canadian National is a classic economic moat stock due to the massive capital required to build and maintain a railway network. So this is basically creating high barriers to entry for any competitor of Canadian National. Unfortunately, the stock performance in the last couple of years was nothing short of terrible, and the stock basically is flat in the last 5 years. This disappointing performance in the last 5 years happened at the same time that general market indices were up almost 100% in the same time period, which makes this underperformance significantly more painful for the shareholders. If we look at the company top-line revenue, we can see that the growth is almost stopped in the last 3 years. Even if we look quarter over quarter, we can see that Canadian National is not growing its revenue. Same story if we look at operating cash flow or free cash flow of the company. The stock had a lot of issues with capital management and capital deployment, and management inefficiencies together with macroeconomic conditions around the world in the last couple of years caused the company to not be able to deliver on promised figures in the past. So fundamentally, the company is stopped growing its revenue and cash flow, and that's exactly why the stock price is not moved at all in the last 5 years. The company does a good job at buying back shares of the company and paying a relatively large dividend, but that's pretty much it. In terms of the valuation, Canadian National is currently trades for a price to earnings of 18 and a forward price to earning of almost 16. It also trades at a price to free cash flow of 18. If we look at historical valuations, it seems the stock currently trades slightly below its historical average multiples, but we should also consider that the stock is stopped growing its revenue and cash flow in the last 2-3 years, so it's normal for its multiple to compress. Overall, while Canadian National is a company with significant moat and resilience, and it trades at a reasonable valuation, I don't like what I see in the company and the numbers. I prefer to own businesses with great management teams that are growing their top line and bottom line, and they have huge runway for growing even more in the future. So for me, Canadian National is probably a pass here, but I still like to have it in my watch list and follow the news around the company. My next contender is fierce competitor of Canadian National in Canada. I mean Canadian Pacific Railway. Almost 3 years ago, Canadian Pacific made a monumental move by acquiring Kansas City Southern, creating a Canadian Pacific Kansas City company. This is the only single line railway connecting Canada, United States, and Mexico. While Canadian Pacific network was historically smaller than Canadian National, this acquisition gives them a unique competitive advantage, especially with the growing nearshoring trend and cross-border trades. If I want to compare these two companies, both Canadian National and Canadian Pacific offer incredible economic moats. Both gives you exposure to essential infrastructure with steady dividends. Canadian Pacific, with its new acquisition, can potentially offer a slightly higher growth potential, and probably it has a little bit of better management team. But also it has higher integration risk. Canadian National is more established, perhaps a bit more predictable, but with lower growth potential. If we look at Canadian Pacific performance in the last 5 years, it is up only 30%. It is still underperforming the general indices significantly. If we look at the revenue, it has a jump after they were able to complete the acquisition, but similar to Canadian National, the growth is almost stopped in the last couple of quarters. Same story with operating cash flow of the company. The acquisition came with significant share dilution and debt, which are the major headwinds for Canadian Pacific in near future. The stock is currently trades at a price to earnings of 23 and a forward price to earnings of 19. This is lower than their 5-year average PE, so it seems the stock is not trading at exuberant valuations anymore. Overall, I like Canadian Pacific more than Canadian National at the current valuation because of the better growth, a potentially better management team who can basically allocate capital better, and they have better routes and assets compared to Canadian National. Okay, shifting gears entirely, let's talk about Waste Connections stock. Waste management as a business is an essential service that never goes out of style. Whether the economy is booming or busting, waste still needs to be collected, processed, and disposed of. Waste Connections operates primarily in secondary markets and exclusive rural areas across the United States and Canada, giving them a strong competitive advantage as permits for landfills and transfer stations are incredibly difficult and expensive to obtain. As such, the demand for their services is constant, they operate in protected markets, and their acquisition strategy continues to fuel consistent growth for the company. It is a defensive play within the industrial sector, and I believe it is a probably better play compared to waste management company. If we look at Waste Connections performance in the last 5 years, the stock is up over 80%, which almost matched the market performance. Their revenue is still growing at double-digit pace, which is great. Their operating cash flow and free cash flow are also growing at almost 14% CAGR, which is great. They slowly started to reduce their share count in the last 5 years, and they pay a small dividend as well. The stock currently trades at a price to operating cash flow of almost 18.5, which is a bit higher than their 10-year average of 17. So Waste Connections has a completely different profile compared to Canadian Pacific and Canadian National. It has a growing top line and bottom line, north of 14% CAGR rate, while the valuation is a little bit on the higher side. Overall, I really like what I see with Waste Connections, but the stock is a little bit expensive compared to its historical figures and compared to what I like in a company. Finally, we have Copart. Copart isn't the traditional industrial company. It's a combination of physical salvage yard and an online auction platform for salvage and wholesale vehicles. When a car is totaled by an insurance company or fleets need to offload vehicles, they go to Copart. They've essentially digitalized and streamlined the salvage auction process, creating a massive global marketplace. This company benefits directly from an unfortunate truth that car accidents happen and the vehicles wear out. Copart is a fascinating play. It's a tech-enabled industrial company that leverages a powerful network effect. If you believe in the power of platforms and want exposure to auto markets in a non-traditional way, then Copart can be an interesting option. The stock is up only 58% in the last 5 years, basically underperforming the broader indices. However, they have very consistent revenue growth of 15% year over year in the last 10 years. Their operating cash flow is growing at even faster rate at 20% year over year, and their free cash flow is growing even faster at 25% CAGR. They had pretty much no dilution to shareholders, which is great. In terms of evaluation, the stock trades at 28 times price to earning and 24 times of price to operating cash flow. The company has huge amount of cash in the balance sheet, which I really love it. And compared to historical averages, it seems the stock is trading close to its historical multiples. I really like what I see with Copart. As I mentioned, I'm looking to add to my industrial exposure in the new year with my fresh TFSA and RRSP contribution rooms. Each of these stocks has their own merits. I already own some infrastructure plays via Brookfield, so I'm particularly drawn to something with a slightly different growth vector. The unique market position of Waste Connections and its defensive qualities are very appealing right now to me. I also really like Copart and their unique business model. So the whole industrial sector in the last 5 years were not doing so great. So I think this is one of the sectors in the market that in the next 5 years will do very well. And I'm trying to basically decide and buy one stock from this sector. I'm still doing more research and probably will do a deep dive stock analysis video on Copart and probably another updated valuation for Waste Connection stock in the future. At the moment, I think Waste Connection and Copart are better fit for my portfolio and my style of investing compared to Canadian Pacific and Canadian National. But anyway, I would love to hear your thought. Which of these industrial stocks would you pick? Let me know in the comment section below. Thank you for watching, and I hope to see you guys in the next video. Farewell.